congratulations to you.
Thank you, Sarah.
For those that aren't familiar with what you do, you're connecting buyers and sellers of digital services. What does that mean?
Correct. So basically, Fiverr connects freelancers with businesses of all sizes. And really the uniqueness of the platform is that the experience of buying a digital service on Fiverr is very similar to shopping on Amazon. You browse, you search, you find something, you click order, and it's done.
What kind of services are the most popular?
Well, graphic design is one, content marketing, videography and animation, music services, marketing and advertising, anything you can imagine. It's the everything store for digital service.
I see voiceover work as one of the squares we're looking at. So I'm looking to create. Exactly. So if I wanted to do voiceovers on the side, I would upload a demo of my voice, and then others would be able to sample it and hire me within minutes if they wanted to.
Within one click. So basically, the system helps you productize your offering, so you can define what you're offering, how much time it's going to take you to deliver, and the asking price. And basically, all that buyers have to do is they screen through the offerings, they find something they like, they click order, pay, and that's done.
Subscription model, you take a cut of the contract, how does that work?
So basically, we take a take out of every transaction, and it's one of the industry-leading take rates of over 26%.
So you're clearly growing very fast, 45% revenue growth last year, but you're still burning through cash. What's the path toward profitability?
Well, if you look at the EBITDA margins, you see that they're shrinking. So the way we actually structure the business is that we continue to grow aggressively while shrinking our negative EBITDA, and there is a clear path to profitability.
You have widespread global distribution. How many countries did you say? 100?
Over 160.
What are the engines of growth in that sort of global picture?
Well, it's really the adoption of freelancing online. The offline freelancing market is massive. We've estimated that market to be $100 billion in the US alone. Europe is 1.5 times bigger than the US. There's over 162 million freelancers between the EU and the US. So the opportunity is massive, and it's just starting to come online. This is like 1995 for e-commerce. So it's so exciting.
The way you measure your market opportunity is based on how many people are freelancing this sort of service?
So in the categories in which we operate, there is a volume of activity of $100 billion in the US alone. And it's still single digits percentage online. It's very old school business. The way people usually find freelancers is they post on Facebook if someone knows a good graphic designer. In a sense. But what we're doing is we're making it a one-click experience. There's no bidding, vetting, negotiating. There's browse, search, buy. It's an Amazon experience to buy a digital service. Nobody has done it before. The average time to make an order on Fiverr is 15 minutes. This is unbeatable. It's unmatched.
I'm trying to think of risk factors here. I mean, where global recession, let's just take an example, right? What happens to digital content in that case, right? What are the risk factors?
Well, I hate to think about us as being counter-cyclical, but I think that we can actually benefit from a recession. I wouldn't want to test that theory, but I think that in a downturn, what would happen is that more people are going to look for ways to make money, so the supply is pretty obvious, and more businesses would like to focus on getting things done rather than hiring people. On Fiverr, you don't hire anyone. You buy very well-defined products.
Well, I think that's your biggest risk.
Well, I was going to say, are you going to get embroiled in are they a contractor, employer? Do they deserve benefits? I mean, we're going to have that raging debate over the next few years, at least in this country.
Well, I mean, Fiverr doesn't hire its freelancers. It's just a market that connects freelancers with businesses that have their digital needs.
I mean, were you at all nervous to go public at a time where the other gig economy stocks, Uber and Lyft, did not have a very welcome reception on Wall Street?
Well, I think the market is choppy in general, so there's always a risk. But we're not here for day one. We're not here for the opening price. We're here for the long haul, and that's how we think about the business. So I think that in general, the markets are good. The reception is great. The opportunity is amazing. The growth is high. And so I think that this is a great opportunity for us to have that growth while gaining the market trust.
Who's your primary competitor?
Definitely the offline market. I mean, I don't know if it's 96 or 97% of the activity offline, but we don't need to eat anyone's lunch to grow. We just need to move offline activity to the online.
And then finally, proceeds. What are you going to do with the currency you've raised today?
So it's mostly working capital. It's really to fuel our additional growth and our path to profitability.
Just to be clear, so if there was a policy movement and an effort by certain Democrats that are talking about this to characterize contract workers as employees, giving them benefits and wages, you're saying that wouldn't affect you?
No, we don't. The way the marketplace is structured is such where we don't have any employee-employer relationship.
But that's because you're relying on freelancers.
We are not relying on freelancers. We're just connecting that supply with the demand that comes for it. We're the platform on top of which they actually conduct their transaction, and we just provide that platform to make that happen.
I guess it is different than Uber and Lyft.
It is.
In that sense.
It's very different.